Good afternoon, everybody. What up? Well, it's sort of like good morning slash good afternoon. Oh yeah, whatever. Welcome back to some delicious content. If you all know, you guys know about the AI boom, artificial intelligence boom that's going on. Welcome to the AI boom, and the introduction of this is semiconductors. To me, I think I'm gonna name this video is that semiconductors is the new gold, the new Bitcoin, the new oil. So yeah, I think that's going to be the title of this video, uh, where we everyone I don't know if you haven't been sleeping under a rock right now, know that right now Nvidia gaming company, king of GPUs right now, it's crushed it right now. It's up. I can't even fathom. I think how much is up. I think it's up. I know it's up more than 100% right now. Nvidia last year was crushing it. Also been crushing it this year, and I foresee that outside of Bitcoin, I foresee that Nvidia, as we embark into this new AI revolution, that Nvidia and like an AMD, it's going to be king. If Nvidia is king, I foresee that AMD is going to be like Prince status. And so what I have here today is that we're going to go get right into the video of just how you can reap the benefits of this AI boom. Now, when you invest in your money and you're trying to rule of 72, you're trying to double your money, you're trying to find instruments, ETFs, stocks, whatever that you can put your money into that's relatively safe or that's going to have a high rate of return. And so I'm going to be keep bringing up like Bitcoin because right now Bitcoin, due to the institutionalized buy-in through Vanguard and Fidelity and then all these institutions that now that's been buying it. So now the uh, the price of Bitcoin is going up. Same thing is with semiconductors right now. So these are not the hottest things around the block that's really has been pumping it just for now into the future. So I have two ETFs that I want to show you guys, and hopefully, uh, yeah, uh, it's not. So right here, the first ETF is called VanEck Vector Semiconductors. It's SMH. So like shaking my head, SMH. It costs $224.99, and I just found this recent semiconductors ETF called SOXQ, which is the Invesco PHLX semiconductors. It costs $39.11. And so I know you like Cadero. Why these two ETFs? Why you show one that's almost close to $250 and one that's under $50? Why are you showing this? What I'm showing you guys this is because in regards to stock price appreciation, places to put your money, ETFs or instruments that have really been driving the returns on the market. So you have QQQ that's up like 30% right now, right? Year to date, as a 3/9, the S&P 500 is up around 7 to 8%, right? These two ETFs, the stocks Q is up right now upwards of 20.11%, and this right here, this SMH ETF is upwards 30%. Now, why? So the difference between this is stock Q right here, the second tab, and the first tab is SMH. They all, if you look at each ETF, it has identical holdings. But the difference is that, and with a lot of ETFs, the difference between maybe a VU and uh, what's another SP 500 index fund? So think of VU and think of maybe like SPY, right? Same identical stocks in the particular ETFs, but it's all about the percentages within certain stocks. So you may see that one particular fund may have 4% in Microsoft, right? And another one may have 4.5%. And if Microsoft is a particular stock that has been like on a tear, that has been producing high returns, that particular fund is going to produce higher returns. So in this instance of SMH versus SOXQ, what you'll see is that in right here, NVIDIA, which is NVIDIA's king, it has 27.24% in NVIDIA, rather SOXQ has 11%. So in here, it has 11% in NVIDIA, 10% in AMD, 8.5% in Broadcom. In SMH, it has 27% in NVIDIA, 9.63% in Taiwan Semi-Conductor, 6% in AMD, 5% in Broadcom. And so right here with this SMH ETF, if you're betting on NVIDIA, if NVIDIA does well or continue to do well, SMH is going to do well also with AMD and then Broadcom and Semiconductor. This one right here is similar, but the returns is going to be a little bit more diversified because instead of 26% in NVIDIA, it has 11% in NVIDIA, 10% AMD, 8.5% in Broadcom, and then 7% in Qualcomm, and then it splits down from there, right? Cadero, why? Why? Again, semiconductors is the new gold, which is the new Bitcoin, which is the new oil. That's that. I'm leading with that. Semiconductors is in everything. Is in the computers. Is in the iPhones. Is in the iPhones that we use on a daily basis. Is in these cars, these smart cars that's driving autonomous by itself. It's semiconductors is in everything. And in order for these robots that Elon Musk planning to unveil and energy and whatnot, you're gonna need a lot of these GPUs and CPUs and a lot of this high tech to operate everything. And as we get into just smart TVs, smart refrigerators, semiconductors is king. Artificial intelligence is booming and is accelerating at a high rate. And so by you investing into semiconductors, the tech industry and these tech stocks already have like high rate of return, right? Like Apple and Microsoft. But then also with this AI, artificial intelligence component, it's just skyrocketing the returns of these particular industries, stocks, and ETFs. So I did a comparison between SMH and SOXQ, and basically, yes, SMH costs more than SOXQ. Let's go through it right here. So in regards to SOXQ is has less investors compared to SMH, and right here because let's go to the performance because of the high percentage allocation to Nvidia and SMH compared to SOXQ. As you see right here, the 1 week return is 10.48 for SMH compared to 9.2. Let's go a longer time frame. For year to date, SMH is up 33% compared to SOXX. SOXQ is up 23%. 1 year return is up 91%. So imagine if you would have put $10,000 into into SMH, a 1 year return will produce. Actually, 1 year your money would have doubled. Usually, it takes your money to double 7 years in S&P 500, and in regular stocks like typical stocks like Microsoft and Apple, about 2.5 years. This ETF by itself has a 1 year return of 91%. So if you would have put your money into this, your money would have doubled to 20,000, about 20, 23, 24 $1,000 the first year. And imagine keeping your money in this for let's say you keep your money in this for 10 years, how much your money would double, and how much money you can sell and just live off of. And then SOXQ is also a beast. If you invest your money into SOXQ for 1 year, remember rule of 72, how long it takes for your money to double, right? right here, 1 year, you're close to, if you put $10,000 into this portfolio instead of $20,000, you probably at 71.22%, your money will be almost double. So your money should be close to like 19,000, 19 and a half. Just for 1 year. If you just did a one-time investment of $10,000, or if you did like a one-time investment of just $1,000, it's this, your money has a lot of doubling to do. And so the reason why I brought this up is because, yes, get exposure to semiconductors, get exposure into the tech industry to compound your money. If because right now NVIDIA by itself costs roughly $900. So if you don't have $900 and invest into NVIDIA is super risky, right? And so if you are on edge and uneasy by investing $1,000 into NVIDIA, $5,000 into NVIDIA, what you do is that you choose a basket of stocks, and so you can choose either SMH or you can choose SOXQ, and so you have two options. You can go with the more risky option, the one that costs more, which is SMH. Costs $224 per share. You can dollar cost into this, and just know that by dollar cost averaging into SMH, that you is a high percentage investor into NVIDIA. You get exposure in NVIDIA, but you also diversification in the semiconductors, not just the world, but just only IT semiconductor industry. You'll be diversified in Taiwan semiconductors, AMD, Broadcom, ASML, Applied Materials, Lam Research, other IT semiconductor chip companies. If and also this ETF produces high rate of return due to its exposure to NVIDIA. If that's price is too much for you, then I suggest and recommend SOXQ, where you're still getting the exposure and investing into the semiconductor space. You're still getting that high rate of return. You're still beating the S&P 500, and for the most part, you're beating QQQ, which is the Nasdaq. So you're still beating both of those indexes, but with limited exposure, well, with a balanced exposure in NVIDIA compared to SMH, and also you also getting a uh, ETF that's lower in price compared to $225. SOCQ is $39, and so if you had $200, you could pick up a couple of shares in SOCQ and still uh, have roughly the same exposure into NVIDIA, AMD, Broadcom, Qualcomm, Taiwan Semiconductor, SML is diversified. And so I would say any new investor, they probably lean on SOCQ to get that exposure in NVIDIA, but then also to be a lot more diversified. I would say that a lot more aggressive investors will lean more on SMH, not S, not SM, SMH, right here. The computer goes a little slow when you do the recording, but if you're an aggressive investor, you are going to basically choose SMH, not fixed comfort. I don't know why I was doing that. You will invest into SMH. There we go. And for supremely aggressive investors, if you really want to just try to double your money, then you would just invest into NVIDIA all on its own in a taxable brokerage account, Roth IRA, or just a traditional IRA. And then, hey, don't forget about Bitcoin. So, hope you guys enjoyed this video. Remember, semiconductors is the new gold. It's the new oil. Make sure you don't invest all your money into it, but have a piece of your portfolio exposed to Bitcoin, exposed to semiconductors. And hey, 5 years, 10 years down the line, when the robots is moving around and everything, you look at your portfolio and see, man, my portfolio is six figures. Thank me later. All right, peace.